Dan Deming of KKM Financial is here for our Trader Rundown. He's ready to get our day rolling along here. Dan, hello to you.
Thanks. Hi, Angie.
So let's talk about this fallout from the jobs number that came out on Friday. Huge disappointment to the market.
Big disappointment. Yeah, across the board, and we saw defensive repositioning, very significant defensive repositioning. You saw the bond market react significantly. Bond prices went up, yields went down. Certainly saw gold pick up a bit as well because that's a defensive positioning. And we did see again financials came under some
financial stocks. Bank of America, Citigroup really led the way down in the market.
They did, and because again they had the expectations built into them that the Fed was going to move, if not in June, then July, and now that's being priced out of the market.
Those are both off the table?
Well, June is like 8% chance right now, and July's been ratcheted down to like a 24% chance from almost 58% just a week ago.
Having said that, when you see names like Bank of America, Citigroup getting hit very hard, do you come in and buy those stocks on the lows?
Well, I guess it depends on what you're looking for in your time frame. So I think that if you're looking at if the Fed is ultimately going to move, if it's not going to be this summer, if it's going to be in the fall, early next year, that if you're looking to hold them longer term, then you could probably make a case for those to be a good place to be. Short term, I think it's too dicey right now. There's too much, the expectations are too close to the fire here as far as the intraday movement of these stocks, particularly when you saw what took place on Friday. That expectation now just really shifted the landscape.
Are we in for a smoother ride now that the Fed is presumably not likely to move, or what is the VIX telling you here?
Well, right now the VIX is really subdued. What the VIX is telling me that any kind of increase in implied volatility, any increase in option volatility, they're quick to sell it because the market's shown the ability to find stability, and it did last week. We saw weakness throughout the day last week. Yet the market was able to find some strength in the second half of the day. So
the resilience is still there in the stock market.
The resilience is still there, and that's keeping volatility expectations under pressure, realized volatility under pressure. So right now, really, the VIX isn't indicating that the option players are pricing in any outsized move at this point.
Good to get your insights. Thank you, Dan.
Thanks, Angie. Thanks for having me.